Ladies and gentlemen, good day and welcome to the Control Print Limited investor call for results discussion of 4Q FY23 hosted by Asian Market Securities Limited. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on the date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. Actual results may differ from such expectations, projections, etc., whether expressed or implied. Participants are requested to exercise caution while referring to such statements and remarks. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Karan Batelia from Asian Market Securities Limited. Thank you and over to you, sir.
Thanks, Darwin. Ladies and gentlemen, good evening and welcome all to the Control Print Limited 4th quarter and 12 months FY23 earnings conference call hosted by Asian Market Securities Private Limited. From the management side, we have with us Mr. Shiva Kabra, Joint Managing Director, and Jaideep Barve, CFO. Now I would like to hand over this call to Jaideep sir for his opening remarks. Post that, we shall open the floor for Q&A. Thanks, over to you.
Yeah, hello, good evening. My name is Jaideep Barve and I work as the Chief Financial Officer of Control Print Limited. Welcome everybody to the earnings call for the 4th quarter of the financial year 2022-23 of Control Print Limited. We appreciate you have taken out time from your busy schedules to attend this one. Hope you and your loved ones are safe and healthy and wish you all a happy financial new year. Mr. Shiva Kabra, the Joint Managing Director of Control Print Limited, also joins me on this call. The detailed presentation has been put up on our website as well as the investor presentation before this call. For those who are probably reviewing the company for the first time, Control Print Limited was founded in 1991. It operates in the niche coding and marketing segment, which is an oligopolistic market with 4 major players, out of which 3 are MNCs, and we, that is Control Print Limited, is the only make-in-India manufacturer. We have our manufacturing facilities in Nalagarh, which is in the state of Himachal Pradesh, for the manufacturing of printers, and in Guwahati in the state of Assam for the manufacture of certain types of printers and the consumables. Both these manufacturing locations are state-of-the-art facilities where we produce good quality products. We manufacture and supply a wide range of printers such as the CIJ, TIJ, high-resolution printers, thermal transfer printers, laser printers, etc. Apart from these printers, we also manufacture and supply consumables like inks, ribbons and cartridges. The industries that we serve are cables, wires, pipes, cement, sugar, dairy, FMCG, healthcare, steel and metals and plywood. We have a strong sales and service team of 350 plus personnel across our 10 plus branches across India. Our domestic presence is served through 1600 cities in India with over 2500 pin codes in it. As of today, we have an installed base of over 70,000 printers across industries. This enables the sale of consumables across the life cycle of the printer. Post a printer sale, we believe there is a continuous demand for consumables over its life, which typically lasts for about 5 to 8 years, depending on its operating conditions. Moreover, our company has a robust network to ensure we provide high uptime and a good after-sales service which eliminates customer concerns. We also have an end-to-end ERP system which is SAP, which supports our financial, production, purchase, sales and the CRM. This ensures maximum transparency in accounting, sales and after-sales, as well as the total control for the inventory management and the order to receive processes. Our systems and processes give the necessary confidence to the teams, vendors, customers, bankers, auditors and investors. We periodically conduct training programs to ensure that all our employees remain proficient in operating and maintaining the machines. We constantly endeavor to customize our products to reach out to other industries to increase our install base. With a strong foundation and 5 pillars like man, machine, material, technology and finance, we are well established to augment our business plan, which we feel we are continuously striving for better and better heights. Let me give you a brief analysis of the standalone financial statements of Control Print Limited for the financial year ended 2023. On the overall position, India has marked its position as one of the fastest growing economies globally. This growth trajectory is expected to continue to 2023 also. Towards the end of 2022, the manufacturers had scaled the production, mainly on the rising international domestic demand for Indian products. This trend also was observed in the first quarter of 23, indicating a sustained improvement in the business environment. Coding and marking systems play a crucial role in the manufacturing and supply chains of both industrial as well as consumer goods. According to certain industry reports, our industry in India is expected to witness a substantial growth with a CAGR of 9.85%. Food, beverages, healthcare, electronics, chemicals, construction, automobiles industries are expected to be the major growth drivers of the coding and marking market in India. On the opportunity side, we feel that there are certain government regulations which require companies in the FMCG, food and the pharma sector to give more information to the consumers about the products, about the industry from where it is manufactured. We ourselves have also gone into certain global collaborations during the course of this year. In December 2022, we entered into a JV agreement with an Italian company called V-Shapes. This is engaged in the manufacture and sale of packaging machines. It is also famous for its eco-friendly single-dose sachets. In July 2022, we acquired a company in Netherlands called Markprint BV. This company is a prominent supplier of high-speed printing and coding solutions, and it's well established in the European market. This is effective in the area of high-quality single-pass printing for packaging and industrial applications. We believe that partnering and having a synergy with Markprint, we will be able to offer better solutions and diversified portfolio. On the revenue front, the operating revenues for this quarter was around 84 crores. The overall operating revenue for FY23 is 291 crores, which is an increase of 15% from the previous year's operating revenue of 254 crores. While our base products happen to be CIJ printers, it is heartening to note that the non-CIJ printers also showed an increasing trend in sales in this year. We continue to expand our footprints in dairy, cements, private industries. We have also launched new products during the course of this year. On the expenses front, we can note that consumption, which is the cost of goods sold, it has remained steady, approximately of about 40%. It's more or less in line as compared to the previous financial year. However, we can definitely hope for improvement in reducing this in the coming financial year with optimized buying strategies. Manufacturing and other operating costs are at a consistent rate of around 3% of sales. This is in line with the prior years. Our employee costs are around 50 crores, which we see a decline in 2.5% as compared to previous financial year, which is largely as a result of the increased sales in this current year. Depreciation is steady at 5 to 6%, and our other expenses are in the range of 30 to 14% as in the last 2 years. The Q4 EBITDA, PBT, PAT, and EPS, excluding exceptional items, grew by 10.9%, 13%, 18.2%, 18.2% year-on-year respectively. Whilst we are proud of all these achievements, we always feel that there is still exists a considerable scope of improvement. We will aim for better revenues, higher revenues, and also enjoy the higher economies of scale. The way forward for us is high consumable sales with improved industrial production, newly launched products during the year, focused marketing plans. We have an inside sales team which will be given targets. We'll focus on the key accounts. Also try to put more focus on the install base and increase our larger market share. And also look at the European companies acquisitions we have done so as to achieve better sales and synergy in this year. The floor is now open for questions. Thank you so much.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may please press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Gunjan Kabra from Niveshaay. Please go ahead.
Hi, thank you for the opportunity. Sir, I'm actually comparatively new to the company, so wanted to understand the business model. Like, what is the active printer base that we have today, and what's the number that we expected to reach in next 2 years?
I didn't get the first sentence, ma'am.
Sir, I'm saying I'm comparatively new to the company and wanted to understand what is the active printer base that we have today, and what's the number that we expected to reach in next 2 years?
See, we've got an installed base of about 17,000 printer base at the moment. And if you look at fairly conservative estimate of 3% growth every year, you'll get your number.
Okay. So how do you estimate the requirement of the consumable per printer? Like, if I wanted to understand that if we are selling one printer today, then what's the consumable that we can estimate in terms of our ink requirement from that printer that can come in? And if we are selling the printer, is it certain that, okay, for next 5 years to 6 years, the consumables for the ink requirement for that printer is being, will be catered by us, and that sale is going to be there? So how can we estimate that ink requirement?
Okay. So the way we see it as if we sell a printer to a customer and he operates in normal operating conditions without any strain on the production facilities and without any abnormal wastages, feel that he's going to enjoy the use of the printer for the next 5 to 8 years. So we can rest assured that the consumables business, what we can get from that particular printer, would be for the next 5 to 8 years.
5 to 8 years is fine. I mean, the printer's life would be around 5 to 8 years. But
once he purchases the printer, so he has to necessarily buy the consumables from us.
So that is correct. But if I'm talking about, say, if if we order a printer, somebody, but how much ink, how much worth of ink will be sold for 1 year on one printer is what I'm trying to understand. That metric I wanted to understand.
Well, let me tell you is that we are in an oligopoly, and though we have the machine run rate consumption for the ink, at this moment it's a little bit confidential data because since we operate in an oligopoly.
Okay, that is okay. No, not an issue. And sir, how much, if you can bifurcate our revenue from how many, different sectors, what is the contribution, major sector is contributing how much revenue? And if sector-wise also the usage of, or the consumption of ink changes with different sectors, so if you can explain me that.
On the overall basis, our line of business is consumable-centric. And then what we can do is that we can say, let's say about 55 to 60% of the business comes from the sale of consumables, and roughly about 15 to 20% comes from the sale of printers. We also have something called as service income, which is the annual maintenance contracts or comprehensive maintenance contracts what we do. So about 10 to 15% comes from that business, and from the sale of spares what we do, that is about 8 to 10%. So that's a brief distribution of that entire business what we do.
So I'm talking about sectors. I mean, how much is FMCG, how much is pharma, how much is plywood, MDF, how much is these sectors contributing? I'm talking in terms of that.
We do not. I mean, if you look at this, there's no major concentration of business sector-wise, but we believe that pipes, food, dairy, these are the top 3 segments for us, and that contributes about 40% of the business for us. The others are every one is about 6 to 7% each.
Okay. So what would be the total capacity of consumables?
Capacity as in?
In tons or in tons, if you can.
60% usage of the capacity.
Sorry?
60%.
So that's the utilization, right?
That's utilization.
You cannot tell me the total capacity of how much capacity?
Please not able to share with you.
You cannot share that. Okay. Okay, sir. Sir, so any matrix on which you can guide us that, okay, if this is the number of printers sold, like last year if we sold around 3,000 printers, or this year if we are selling, then how can we estimate that, okay, this is going to be the total consumable sales? If not directly, if you want to tell, but anything like matrix that we can judge on, or anything from that sort, if you can explain.
We have year-on-year, let's say about 10% growth in the number of printers what we sell.
Correct.
Yeah, that we can do.
That you can do.
Yeah, we can do that.
Okay, yeah. Thank you so much, and good luck for your future endeavors.
Thank you so much.
Thank you. The next question is from the line of Darshil Javeri from Crown Capital. Please go ahead.
Hello. Hi, sir. Congratulations on a great set of numbers. Hope I'm audible.
Yes, you are audible, sir. You can go ahead.
Yeah. So, I would just like to know that we've been growing at a pretty good rate currently. So, what would be our revenue targets for the upcoming year or maybe next 2 years? And are our margins stable at 25%?
So I will answer that question, if that's fine. But, we don't give any projections or targets out, so I can't tell you anything. Obviously, we hope that continue having sustainable growth. I think as far as our margins goes, like you would have all probably seen the trend. Of course, there might have been I don't know what happened in the COVID time or something sort of dipped. But, it's been sort of consistent over an extended period of time. So we're pretty sure we can maintain that. In fact, on a bigger base, it's much easier to maintain the margins. But, as far as the revenue, it's not possible for us to project that as of right now. So,
Okay, sir. So I would also like to know if our JV and our new acquisition, so how have they been contributing to the business? Are they more margin accretive, or how is the demand in Europe? So could you give some color on our acquisitions?
yeah. So as far as the acquisition goes, I think Jaideep's got the numbers. It will give you a better idea. But it's been consistent since last year, and they were about 2 million odd euros in turnover, if I'm correct, approximately, and some good profit contribution. So that was Markprint. So we are still working on integrating some more of the products between us. It's been a bit delayed, and we've actually just finally received the first set or so of printers, and now we're going to test them on certain applications here. So yeah, so far it's not been bad, but it's not been like the integration has frankly been a bit slower than expected on both sides, because they've been busy with some stuff and then our teams were busy with some other things. And as far as the joint venture goes, it's still a bit early. Just actually we've activated everything now, and yeah, it's not actually contributed to the bottom line or the top line at all, but it's looking active now, and now it should actually give us maybe some numbers in the coming quarter, maybe not in this quarter, but we should start seeing some business being done in the coming quarter.
Okay. Okay, so the JV might contribute from...
like all of these types of things that we do, I understand the excitement that everyone has, but normally we've got a pretty longer term planning horizon in a lot of these type of strategic activities. So, it could, our thoughts are anyways, we're looking at a 3 to 10 year type of a thing, so it's obviously coming from a different...
Okay. Yeah, that helps a lot. Okay, thank you so much, and all the best for the upcoming quarter. So thank you.
Thank you. The next question is from the line of Abhishek Agarwal from Naredi Investment. Please go ahead.
Good afternoon, sir. Sir, my first question. Company will run by maintaining a cash balance of 50 crore, for which you have also made investment. This is a good thing. But why have you invested in direct equity? Why you did not go through a mutual fund? And also, you are not an investment company, and it is not our job. So what is purpose? Please tell us.
Hello.
Hello.
Jaideep, do you want me to answer or you're getting that?
Sir, I got your question. We know we are not a financing company, but the reason why we are keeping them in the investment as of now is that we are always on the lookout for new acquisitions, and we would like to keep our funds ready whenever the acquisition happens to be a good one for us to invest, and the legal due diligence and operational financial due diligence is done properly. The target couple is identified, so we get funds to invest it over there. So that's the reason why we've kept it in equity as of the moment.
I agree. But why you have direct investment in equity?
Yeah, this is Shiva Kabra. I will just say that, so what, we've gone through this before. I think, there's obviously someone takes our con calls in the past and just go through it. So I don't want to stop that. But I think we've announced clearly that, normally we're keeping this current cash sort of liquid balance of about 50. And, beyond that, we would be redistributing the money unless there's some immediate acquisition or investment in line. So I think we've been reasonably clear with our policy, our distribution policy. Of course, and there can be an endless amount of questions, as we discussed in the past, whether you should keep it in a liquid fund, whether you should keep it in an FD, whether you should keep it in a mutual fund or this thing. We felt we looked at it very closely as discussed. Mr. Kabra had also given this, the board had discussed this in the AGM, one of them. And they said that, in our own past history, we've on average done reasonably well. We're expecting that this money is going to be consistently available because we are generating cash. So even if we use it for something, we will rebuild that cash balance. So there's no direct pressure on, requiring this money for some immediate thing. And considering that we've gotten a reasonably better return if you consider the dividends and investment. And also, I will point out that the dividends we get through, we can redistribute tax-free, I believe. It's whatever the Jaideep will explain it to you. But, so we've done a calculation on that. We felt we were getting a reasonable risk-weighted thing compared to this. But like I said, it's not like our main business. We've made that very clear. Once we get to a certain level, we will redistribute the remaining money either in whatever form the board, decides upon. Whatever form the board decides upon,
So in future, you also invested direct equity. Continue as of.
No, I think that we discussed that at board level. Like I said, in the past, we've had a certain, when we evaluated in the past, we had a better return on that. And in the future, there's no reason why we will take a specific take on. We'll see what we feel is best. I think the board has given a clear, direction which we have communicated, which is that we will be, if there's excess cash and there's no specific, acquisition or investment that we are looking at, then we will, return that. I think that's what I can say. That, to me, covers almost all the...
Okay. Thank you so much, sir. And there's a second and last question. What is CapEx plan for FY24?
It's marginal. I think the depreciation normally covers the CapEx, so something like that.
Okay.
Did you get my answer? I said that normally there's not really much CapEx at all in our business. So the depreciation normally covers the capital investment, if any. So it's the net block should be about the same, is what I'd say. Jaideep, anything you want to add out there?
No, it's a fair answer, Shiva. No, nothing major is planned as of now. But then if it is there, the depreciation will cover it.
Okay. Thank you so much.
Thank you. The next question is from the line of Nesar Parekh from Native Capital. Please go ahead.
Hi. Hi, Shiva and Jaideep. Congratulations and thank you for taking the question. My question, couple of questions. First is, can you just talk about what were the printer sales in Q4 and the full year?
Jaideep?
We can. You're talking about just the Q4 or Daika?
Yeah, so I'm talking about Q4 and full year both. Yeah, if you can tell me number of printers sold in Q4 and full year.
Actually, Q4 we would have sold about approximately 950 printers. And a year round we would have about 3,200 to 3,300 printers in the year.
Okay. I know you don't give future guidance, but just, as you're looking for this year in FY24, how are you seeing the traction on this, especially in context of, the competition? Because what we understand is, competition also going very aggressively, both in terms of the new technologies they're bringing in, people they're hiring, etc. So, what is the sense of competition and how do you see the printer sales, say, for FY24? Just directionally, if you can talk about that.
Yeah, so I can't comment, but I mean, competitive intensity is the same as what it was in the past. Like we have maintained, before also that essentially, the bigger customers in India, the ones, who want to take the least amount of risk will go for either us, of course, Vijay, Domino, Markem, and Marge. And, we are competing pretty well with all three of them. And as far as, we don't see any major change in the competitive intensity. But of course, the first month has been fair. I can only talk about April so far. So, we'll obviously see how the rest of the year pans out. But it's looking positive so far, like the cases. And it's looking in line with last year so far.
Okay. Got it. And in terms of the mix of printers between CIJ, TIJ, laser, can you give that for the year?
Well, Naika, please don't ask us about the breakup. This is too proprietary of information. We have our numbers ready, but the breakup into CIJ and non-CIJ is a little bit confidential as of now.
Okay. Okay. And in terms of, you did talk about your packaging JV. I just want to understand what is the modus operandi over there? Like, would you be, is it a JV company will sell together, or do you have distribution rights and you will sell, or how does that work?
So essentially, what they have is they make some packaging machines which have some unique features to it, and the packaging material is also proprietary to the machine. You can think of similar in the Tetra Pak type of a thing. The Tetra Pak sells the machine, and they also sell the Tetra Pak bricks on top of selling the machine. So that's something similar. And what we are doing is we will be manufacturing some part of the range of machines here, maybe not the entire range, but some part of the range. And we also will be, I have already started working on manufacturing the proprietary packaging material, the flexible packaging material out here. So we made one type. There's another type which is fully recyclable, and that's still, a few months. This takes time. So we have to make sure everything works perfectly, and that's the second thing we have to get done in place. And there's a third one, which is a compostable one, which is still quite far away. We haven't started working on that. So basically, we will make the materials out here, or rather, we get it sourced for ourselves from some specific manufacturers, and we will sell it directly to the customers in India and our areas of operation. And we will also be making the machines ourselves in our factory in Nalagarh. So that's the scope of the JV, and this is covering India and a few neighboring countries.
And the economics is how is it? Do you have to pay certain royalty, or is there a profit share or any?
No. They have the equity in this company, right? So that's
okay. Yours is 50%.
See, whatever. I don't know what they're gonna. Obviously, we make some profits, and we might have to reinvest it and all. But eventually, I'm assuming if there's enough surplus, they'll get either that equity will be valuable, and they can get dividends of it. So
Right. And it's a 50-50 JV, right?
it's a 70-30. It's right now it's 90-10 because we're still waiting for some RBI permissions and some compliances. So right now we own the company. We still have to get some clearances before we can issue the equity to them for 10%, and then they will take it up to 30%. This is the way it is. So they have to pay in then to take it up from 10 to 30. So it's a 70-30. Eventually it will be 70-30. Right now it's 100% with us because we still have to get some clearances for their investment.
And how big is this like company in terms of their home market or something? Are they is this new technology just getting started, or is it a big thing in their home market or something like that?
No, it's pretty nascent.
Okay, got it. On track and trace, right? I think you were talking about that also. Are we able to get any of the products finalized on that, and when can we see sales of that actually picking up?
We've had some sales recently, so it is picking up. And of course, because of the pharmaceutical industry requirements, the demands are increasing out there. So we are getting some benefits of that. But it's in process. It's a ready product. It's a ready solution from our side. So anyone calls up, we have a solution ready.
Okay. And last, and then maybe I'll come back in the queue in the line again. FY25, your target was 400. Now with where you stand today, and with all the JVs and everything that you have, how do you look at it? Is that something that you'll still achieve? You'll go above, beyond, any sense?
I mean, we can't say anything. The board had set us a 400 crore standalone target, so it's not relevant with the other ventures that are there.
Okay.
So so obviously we have that target was set to us. But I mean, I do want to say that it was the board that put it out in the AGM to the shareholders, and obviously then it's become a public thing. So but obviously that means that there is an expectation from the board, and we're working towards that.
Understood. No, that makes sense.
That was a standalone number, so it's not anything to do with obviously. It's easier to buy a company of 50 crores and add to that target, but that's not. It was a standalone control print number.
Got it.
So our target, I think this will be 292 or something, 291, and so that's the number we have to take to 400 as per the.
Got it. Okay. Thanks, Shiva. I'll just come back if there's something. Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. The next question is from the line of Devanshu Sampad, an individual investor. Please go ahead.
Yes, sir. Thanks for the opportunity. Just, so Jaideep, sir, your voice is slightly muffled, so just request you to, adjust the mic accordingly. So Mr. Shiva, just a question for you, right? So, can you tell me what's the cash and cash equivalent right now as of March end?
I can hear you again. Can you repeat that?
I'm saying the cash and cash equivalent currently.
Yeah, Jaideep, you have those numbers, but I think it's there on the balance sheet right there. I think we are about 70 crores between cash, liquid investments, whatever, or financial investments of different sorts.
Okay, so around
about 70, but the exact number was published. So, if someone looks at it'll be there as cash, bank balances, and investments, and all 3 of them are liquid. So
it's about, it's about 15.5 crores.
So how much, sir?
15.5 crores.
So I think they're asking about liquid investment. So it's
total investments in excess cash on books basically is around 65-70, if I'm not mistaken, right?
Yeah, which includes the investments. Yeah. So I'm just talking.
Okay, so one question I have, there was a comment that Mr. Shiva had made very clearly, right? So ideally we should have returned everything in excess of 50 crores that we should have maintained. and we've only paid out about 15 crores of dividend, which is, if I look at the payout ratio, it's the lowest since 2016. So I'm a little confused because, the payout should ideally move up, right? Because we have more money than what we had sought to keep in this cash and cash equivalents. And so is there any change from what Mr. Kabra mentioned earlier that we'll be returning all the money above this number? You mentioned that we'll be needing some funds for some acquisition, but shouldn't that 50 crore amount be taking care of that? Or are we looking at whatever numbers above 50 is what we'll use for acquisition? I'm a little confused. So if you can just help clarify this.
So I will clarify that. Again, what I did say was that, the board will recommend the most tax-efficient manner possible. I do want to say that, there is an expectation of a dividend that if you give X, then it's there every year. So, maybe there is views that maybe other methods might be, more tax efficient or, more suitable to return cash back.
Okay, so that's something that we can still expect some announcement from the company soon, I suppose then.
Yeah, so if the trend continues, then I'm sure that, it could be that in the Q1 we could see.
I mean, yeah, we are generating about anywhere around, 45 to 55 crores of free cash a year, which will obviously just keep adding to the cash balance we have right now. So, sure. Okay, I got your message. Thank you very much, and wishing you all the very best. Thank you.
Thank you. The next question is from the line of Raj from Arjav Partners. Please go ahead.
Hello, am I audible?
Yes,
Yeah.
you are.
So my question is, as you said, hello, am I audible?
Yes, sir, you are audible. You can go ahead.
Yeah. So what you said is the average life of printer is 5 years to 8 years, right? So how much is the amount of total ink?
Excuse me, I think that's slightly incorrect. It's normally between 8 to 12 years.
8 to 12 years?
It can be 5 years, definitely in cement, steel, and some other industries. The printer life is about 5 to 6 years only. But on average, I'd say like in a food or dairy or, a pie company, it will be between 8 to 12 years.
8 to 12 years. Okay, so in those 8 to 12 years time, right?
Not more than 5 years.
Understood. So in those 8 to 12 years time, so how much is the amount of ink which you can sell it to your client on a roughly basis?
But you will understand, that different clients have a different rate of production.
No, I understand. But still, just on an average, just a very rough figure would be good.
Yeah, Jaideep's got that number. I think it's there in the presentation. Jaideep?
We have the numbers, but Shiva, because we have the oligopoly, we don't share these numbers.
So you don't share numbers? It is fine. All right. Other question is, what is the average amount of printer? Hello, am I audible?
Sir, you are audible.
Yeah. So what is the average ticket size of a printer?
Average?
Like average order size of one single printer?
Yeah, so it goes from about 1 lakh to about 4.5 lakhs on average, like the standard range of printers.
Acha. 1 lakh to 4 lakh, right?
Yeah, 1 to 4.5.
Understood. And in this AMCs which you have, so can we expect a higher EBITDA on AMCs?
So our businesses, you can clearly break it up into 3 parts, or rather 2 parts, like the sales of the printers, and what we call the installed base business, which is broken up into further 2 parts. One is the consumables part, and one is the service spares and filters part. I think approximately, what is it? I think 21% of our business is filters or something, 21%, something like that.
20%
is aftermarket business, and definitely, there's no secret that we made to the, that almost all our margin is earned on the aftermarket business,
Sorry, I didn't get it.
I said there is no secret. We have made, that almost our entire gross margin is earned on the aftermarket business and not the...
Aftermarket is the highest one. All right.
Yeah. So that's including the spares, services, filters, and the consumers, fluids, ribbons, and so on.
All right. Highest one. Acha. One more thing, if I could squeeze in, that in this, the JV opportunity which you spoke about, so how big can that opportunity actually grow? And how much, how are investors supposed to look at that opportunity?
I mean, right now it's just an opportunity. So, till we don't make anything concrete out of it, it's not possible to comment, I think.
Acha. So can we expect in future calls you will be able to give some clarity on this?
Maybe towards the back end of this financial year, we'll give you a much better picture.
Back end of the financial year. All right. And also, can we expect FY24 growth rates to be similar to the historical rates, right? Because since you are not going to do any more expansions and all those things, right?
So it's not possible for us to know. I think this question was asked. So we've.
No, but you can always give a
April
qualitative answer to this one.
Yeah, April has been good, and the number of cases is active is not bad. It's in line with what's happened so far last year. But we don't know what's going to happen in the rest of the year. So.
Acha. All right, sir. Thanks. All the best. See you in the upcoming call, hopefully. Yeah. Bye.
Thank you. The next question is from the line of Karan Batelia from Asian Market Securities Limited. Please go ahead.
Thanks for the opportunity. Shiva, I think last year, most part of the year, we had supply side challenges. So how do you see the situation shaping as of now?
No, it's definitely improved. That's a positive. Still some niggling issues for sure, but I'll say it's down by 80% the issues have been resolved. So still some things we are having, but it's been resolved to a great extent. So that definitely helped us in the last few months, I think.
Right. And now the cost escalation, have we able to pass on whatever cost increase we had seen for last year till now, or we still negotiating with our customers for that?
No, we had started on the price increases. I think, the majority would be true, but it might not be completely done.
Right.
So it's still in process, but I'll say that the majority of price increases have taken place in the last few months.
Right. And really, sir, if you can help me out with the breakup of 291 crores, being printers, spares, consumables, mask, and others.
So, if you want in pure percentages, I can only say that about 18 to 20% is in printers, about 57, 58% is in consumables, spares contributes about 8%, and the service income is about 15%. We also have a small portion of the mask business is about 2%. So that's the entire 291 breakup if you want.
Right. Got it. Thanks. That's it from my end. I'll join back in the queue.
Thank you.
Thank you. The next question is from the line of Deepan Sankara Narayanan from Trustline Investment Solutions. Please go ahead.
Hello, good evening everyone. Thanks a lot for the opportunity. So firstly, in the opening remarks, you mentioned that there is some increased regulation for FMCG and pharma sector to put more information on content production, batch size, etc. So any deadlines mentioned for these sectors when this could get implemented, which could be a key driver for our growth?
So if I cover that question, you might have seen that recently, you have to print like the price per gram or the price per 100 ml or something like that. So that's been a sudden thing which then increased the amount of information to be printed. So in some cases where people were changing the pack size, now they have to use the printers to print this information. The second situation was regarding the pharmaceutical industry, where there was some regulations where they had to, print, they had to trace their QR, their product through the supply chain, through QR codes, and in the full track and trace system, where we have supplied a bit, but that has been delayed by the government. The regulation has not been withdrawn. It was originally for this year, I believe in August. It has already been postponed. I don't know exact details of when it's been postponed to, but the pharmaceutical industry is a very strong lobby, but it has been postponed, but it's not been withdrawn.
Okay. So secondly, Q4, though there has been good improvement in gross margin, but EBITDA got impacted because of our sharp jump in other expenses. So what is the reason for that sharp jump? Any extraordinaries involved there?
So if you look at the other expenses as a percentage of the sales, we don't have much of an increase, but we can look up to that particular segment as a necessary improvement in the coming years.
So this run rate will be continue?
Well, we can always look at cost optimizations, which will definitely have to focus on the next year. So we'll have better margins in the next year in that.
Okay. Thanks a lot, Andal.
Yeah, thank you.
Thank you. The next question is from the line of Harsh Beria, an individual investor. Please go ahead.
Hi, congrats for the good set of results this year. In your presentation, I think on a slide it was mentioned that new products are being introduced for industrial and non-industrial verticals. Can you talk a bit about these new products?
Yeah, so these are some more specialized, applications where we fine tune some of our existing products, or rather employ some technologies for some more specific types of applications. So more for steel marking, more for certain things in the wood sector, or the plywood sector. So this is when people want to do something beyond the standard. So what we're doing is we're doing coding and marking. So if you really look at this, batch numbers, date codes, expiry dates, MRPs and stuff. But then a lot of customers also rely on us for some branding, and of course for their track and trace, for printing QR codes and tracking their barcodes and tracking their materials through the supply chain. So on the branding front, of course, for a lot of customers, they're looking at different options, which is to print maybe multicolor, and they want higher resolutions, and they want better quality of codes, and so on. So, we've got some different products that we have been working on developing, and I'll say it's a very nascent stage of the sales part. But, of course, it's something that, because, obviously what happens if someone is spending, I'm just giving an idea, so I'm spending 100 rupees printing. So what I can do is I can rely on volume growth, or I can try to go back to the customer and offer him something better, and maybe he's willing to pay 200 rupees for that also. So, we work on both fronts. So this is the idea, was to see if we can upsell also to some of the existing customers. So maybe they are willing to, pay for more per print.
Okay. So this is in line with what we have been doing, like building a software team to maybe track the supply chain and giving customized services to end customers. So this is kind of in line with that.
So that is part of our track and trace thing that we're developing, and we've actually had some more successes on that front in the recent past. Like I said, also mainly more through the pharmaceutical industry requirements. So that, of course, has some different aspects. That's a software aspect that we are working on, and of course we combine the software and the hardware, and also all the other things. So it's like a single point of contact for the customer. But this is, I'm talking more on the printing side only, like with the printers, but, giving some more options to the customer, so where they feel their product stands out more in terms of the branding that we do.
Got it. Can you talk a little bit about your Sri Lankan operations, how it's doing right now?
Yeah, Shiva, I'll answer this question. With the Sri Lankan operations, we have regrouped our team over there, and the sales are, not on a very high growth, but, some sales are happening. And week on week, we are experiencing new sales, both in consumables as well as spare parts. And we intend to, review the situation again and try to employ new people, both in the sales and the service, and try to revive operations in a much more focused manner going ahead.
And my last question is on our inventory. It's commendable how well we have done on optimizing inventory in the past few years. What is the optimized inventory days for our business?
The inventory will obviously depend upon some timing difference also. If you look at the trend, a lot of purchases happened in the last 15 days of March 23 in this year. So as a result of which, you find a substantial increase in the inventory as compared to the previous year. Otherwise, it's in line with whatever the cost of goods sold we are having over the previous years.
So for reaching our target of 400 crores in standalone sales, we can do this with 70 to 80 crores of inventory.
Well, we are, what we do is that because of, so many tensions like the Taiwan-China tension or the Ukraine-Russia tension, so the global supply of key components like, like boards and circuits, all the chips, that was quite constrained. So from a risk mitigation point of view, we've tried to build up the stocks so that, we don't fall shortage of anything, and we keep on, delivering our printers to our customers based on the orders.
Perfect. Thanks for that clarification. That's it from my side.
Thank you. The next question is from the line of Ashok Shah from LFC Securities. Please go ahead.
Thanks for taking my question, sir. I am very much thankful for excellent performance. Sir, in the presentation, we have stated that we are serving 2,500 pin codes. So how many pin codes to be pending to be served? And also, sir, already 17,000 printer we have got pre-install base. So can you throw some lights on how many printers of competitor are in markets? And also, do we know same data about our competitor also, or they are not disclosing data, or it's not available for us?
See, our three competitors are closely held subsidiaries of their foreign counterparts. So very little information is available in the public domain for them. So they are private limited entities, so not much of information we can get about their operating statistics.
So is it fair to disclose so much data from our side, because we may be facing some competition or the data to our competitors?
So this data what we're sharing is not a confidential data. Whatever we can restrict, we are restricting.
Okay. And sir, during the quarter, how many new customers we acquired?
In terms of customers, we can't say anything, but during the quarter, we would have sold about 950 odd printers.
But any specific new company we have added as a supplier or something like that, because a new customer is the most important, because that could help us to grow in future substantially via new addition.
We have got blue chip clients on the customer list who keep on giving businesses because they increase in size. But yes, to answer your question, we have made forays into new customers, and that is what I can tell you on this call. We can't disclose the names of the customers or the kind of volumes we have done with them.
Okay, and sir, one suggestion: last 3 AGM was held virtually. So currently, new physical AGM is allowed. Please hold AGM physically if possible. Thank you, sir.
Okay, thanks.
Thank you. Ladies and gentlemen, we request you to please limit your questions to 2 per participant. The next question is from the line of Rajneesh Bell, an individual investor. Please go ahead.
Yeah, good afternoon, and congratulations on a good set of numbers. So I have actually 2-3 questions. One is like, what is the current market size of the printers, and how much is our market share? And second is on you told that you have kept some cash for the further acquisitions. So it will be on the printer side, or you will be diversified to some other sector?
Yeah, Shiv, you would like to take this question?
Yeah, I'm going to answer this question. So as far as, the thing is, we are in the coding and marking business, and basically that is a sort of subsector of digital printing. We have clearly intimated that, and one of the reasons of the Mark Print acquisition is we want to get into some more higher-end applications in the coding and marking space, or it's beyond coding and marking. It's sort of in a undefined sphere. Yeah, but you can say it's like a higher-end version of coding and marking. And that's definitely a diversification that's happening. And yes, we have spent on the acquisition to do it. And of course, we're also beefing up our own internal development capabilities to meet up with some of those applications. We have diversified in the packaging sector where there's an overlap of our customers, and this is through the V-Shapes joint venture. And we have diversified into the track and trace, which is an integration of our printers all the way down into the software. And, also we're now working on fine-tuning it so that essentially what we were doing was we were providing traceability to the customer. And now we're actually working on, actually resolving customer issues, so which could mean inventory control through FIFO. It could mean preventing of diversion of goods from one area to another area. It could mean dealer incentives or other types of incentives that are managed through the system and so on. So and of course to get in touch with the end customer and to resolve the issues besides, of course, anti-counterfeiting. So there are diversifications which are related to our core business, but I wouldn't say like there are major diversifications. In the end, we are just selling more solutions to the same set of customers. But yeah, there is, it is a diversification. All three would be considered to be, whether you're talking of the track and trace and providing the full solution, whether you're talking of getting past coding and marking into a more higher end digital printing type of a solution, or whether you're talking of the packaging industry, the specific V-Shapes opportunity that we have started. All three of them are diversifications, and strictly defined would be close, but not exactly our current business.
Got it. And how big is the total market size, and what is our current market share for our current business, and how big is the market for coding and marking space?
Yeah, so Domino, we are number 4 in the industry. We think the gap between us and the number 3 players now, we're still number 4, but the gap between us and the number 3 players are quite small, at least on a standalone basis. We're a little bit less than them, but not that much less. And so the 4 of us combined would be about 14 to 1500 crores in sales. That's what I would think. And about 1450 crores in sales is the 4 of us. The total market will be in the region of 1900, between 1800 and 2000, somewhere there.
And how about the coding and marking space market size now?
Yeah, so that's why I said the 4 of us combined between 14 and 50 is my rough estimate, give or take, like 50 crores plus minus, and the entire market would be somewhere between 80 and 100 house.
Understood. And coding and marking space, because this is a high technology business, and this operating margin will be much higher than your current business, or will be similar margins will be there?
I didn't understand that question. Could you repeat that, please?
The operating margins for coding and marking space of business will be similar to your current business, or will it be higher?
But we are in the coding and marking business.
Okay. Okay. And another question is on the V-shaped business. When do you think you will start the revenue for this business, in this financial year or next financial year?
I'm expecting to have some revenues in our joint venture in this year. Sure.
Okay. And in last call, you said you are going to bring some technology from the mark print to the Indian market. So what is the status on that, and how big market we can capture through mark print business line? Because it's different from our current business line, no?
Yeah. So that's a bit delayed. I had mentioned earlier, we've just about got our first set of printers from there, and now we will be running it at some customers and see what sort of customizations we need for the Indian market. Obviously, the cost needs to come down. So yeah, frankly, it has been slower than what we promised and what we expected, but it's still moving forward, yeah, but it has been much slower than what we all expected. And, both teams on their side and our side, there's not that much extra manpower available or resources and bandwidth available to, focus on every single thing to do. So, yeah, I'm hoping that the coordination is much better this year. And, we at least have more for development phase this year and then start getting the benefits from the next financial year.
And last call, you said you are going to invest some more money in mark print. So what is the status? Have you already invested more money, or you are yet to invest that money?
So they already have a pile of cash with them in mark print itself. We were looking at it to grow further, and that's something we need to discuss with them. But they do have financial resources themselves, and also like a surplus cash balance on their side. So, yeah, that's their aspect. Jaideep, if you want to give some specific details.
Markprint actually works on a healthy operating margin. I mean, the net profit margin is also 15%. So they've got good enough cash resources at the moment to augment their operations. But in case, I mean, whatever they need, I mean, if they want to expand into European markets or the American market, we'll be obviously there to help them out in case substantial thing coming out.
Okay. Thank you. Thank you for your answers. And the last question on the, you have surplus cash on books. Are you thinking for any buyback for the tax efficient purpose?
Yeah, we mentioned that the board will be looking at different things in the near future. We've come above that 50 crore limit. We did do an acquisition, so we wanted to do that. Of course, in case there are other things in line which nothing is concrete, then we'll talk about that also. So yeah, obviously, like I said, it's a board decision what to do. But if there is excess cash on the books and there's no capital investment or acquisition, we will return that.
Thank you very much for the detailed answers, and I wish best of luck for this financial year.
Thank you so much.
Thank you.
Thank you.
Thank you.
We have the next question from the line of Pawan Kaul from Compound 26 Capital. Please go ahead.
Hi. My question was around the fact that you mentioned that the industry is an oligopoly industry. So how difficult or how easy is it for you to kind of source customers, and what is the decision-making process for a customer when they are procuring these printers?
So typically, customers tend to stick one or two suppliers that are established, and what happens is that if they have some new requirements, which that's normally when they look at somebody else. Everyone occasionally has issues with their service and supplies, or rather not their supplies but their services and their printer performances. And at that point of time, if the customer experiences downtime, then they will look at changing. In general, the single most important decision-making factor for customers is the perceived reliability or the actual reliability of the product and the service. So what they want is they want the product, they want these printers to work, and they don't want that their line goes down at any cost because of our printers or this type of coding and marking equipment. So that's the single most important decision-making factor. And on a second note, yes, the market sort of, or the customer sort of perceive the four of us as the four key options available if they don't want to do, experimentation.
Understood. And are a lot of these printers kind of off the shelf, or are there a lot of customization built in? Because you mentioned earlier that the price point is between 1 to 4 lakhs for each printer. So would it be mostly off the shelf?
Because there's a range of printers. So, but yeah, they're largely off the shelf. The inks change in case to case, but the way we install it on the line, is what really changes from every customer to from one. So there's, like I said, we have a range of printers. We must be having we have 6 different lines of printers, and in that we have multiple printers or different models for different. So we have it's like a range of products. So it's like you have air conditioning, and you'll have window ACs and split ACs and cassette ACs and the VRF type ACs or whatever, and you'll pipe it every. So depending on what the different people require. So so I guess it's something like the similar situation here. We have a range, but yeah, they're sort of standardized products, and then the way we install it on the line, the inks that are there again, so somebody had even mentioned that in the beginning about the ink capacity, but we have about 50 to 70 different types of inks that we sell. So there's no capacity. It's more about a technology barrier. And yeah, there is a capacity, of course, but it's not difficult for us to increase capacity because we already have that set up. Instead of running 8 hours a day, we can just run 10 hours a day. So create the ink, qualify the ink on our printer to make sure it runs reliably, to make sure that it's stored for 12 months, and even if people forget to use it and then they use it on the 13th month and it still works perfectly, those are all different, much more difficult things to do. So yeah, so that's the way it works.
And when you look at in terms of planning your production schedules, what kind of visibility do these customers give you? Is it like a 3-month, 6-month kind of visibility that you have on your order book?
For the fluids, or rather the consumable spares and services, more like X stock, is the customer's expectation. Unless it's a specialty, and then we tell the customers that for these things, we will only make it to order, and then the customers know. But the standard 20 to 30 inks would be available X stock. And the printers normally, customers expecting between 4 to 12 weeks for delivery, depending on the situation. Depending on the type of product, or depending on whether it's a project or it's just like, a replacement and some various factors.
Understood. And last question. As interested in the fact that it's an oligopoly industry and only 4 players, so what do you think would be the barriers to entry in this industry, or is it easy for anyone to kind of set up operations in this industry?
So I think reliability and perceived reliability is the most important thing. So obviously, first, the person needs to have a technology of a high level, and then, and what I'm saying is like we provide, like we measured our uptime, we were giving like 99.4% something uptime, and yeah, I mean, the gap between us and say like, some of the Chinese, the other types of guys has reduced. And some of the other people also have good products, but it's like, you can't just provide the uptime through the product. It's the product, the service, the spares, the expertise that they've built over generations. Even if 2 engineers leave, you have to replace them without losing a beat, and so on and so forth in that given area. So it's about having that entire system so that the customer, the sort of customer's basic feeling is that I like you as long as I don't have to call you because things are going wrong. So, so that's how the way the customers think about us. So obviously there's a technology barrier, and then the second thing is I do believe, if you ask me personally, I think that it's not high value enough for customers to frankly care about and explore multiple alternatives outside us. Because this is, it's a small part of his budget, so he's not going to overthink about this, is what my personal view is. So, once they feel that they've got, like, say, 2 suppliers that they believe in, then sometimes they're not even interested in a third or a fourth one. So even that's sometimes a challenge for us, because if some customers already satisfied with, say, Domino and Mark MMR, they might not even consider us or Videojet, until they want to replace one of these 2 because they have, they're not happy in between. So, and the same for us in, a lot of cases. So that's the sort of situation that's there, because, I mean, yeah, it's like a minor thing. So it's not like a major cost or a major production cost by any stretch of the imagination, or a cost of a product. So, it has a limited bandwidth also, unless the printer doesn't work and the line stops.
Understood. Thank you so much for taking my question.
Thank you. Ladies and gentlemen, please limit your questions to 2 per participant. Should you have a follow-up question, we would request you to rejoin the question queue. The next question is from the line of Saket Kapoor from Kapoor and Company. Please go ahead.
Yeah, namaskar, sir, and thank you for the opportunity. Couple of points on the balance sheet part. Jaideep, sir,
Yes.
Sir, please explain this goodwill account of 10 crore. 10 crore rupees. This has been generated over the last year. Last year it was 48 lakh, and this year it is 10 crore 21 lakh. And secondly, sir, we have also seen this manufacturing and operating cost line item going up from 1.5 crores to 3 crores. So this is only in commensurate to the revenue from operations, or what should we look into it?
So I'll answer the first question first. The goodwill which has come is in the consolidated financial statement, and it is basically coming out of the acquisition what we've done in the Netherlands. That pertains to that entity. So it is Martin's goodwill which we have taken care in the consolidation accounts of Control Print BV.
Okay. So the Netherlands acquisition, sir, what is that? What are we holding the equity percentage in terms of equity?
But we are holding Control Print Limited holds 100% of the shares in Control Print BV, which in turn owns 75% shares in Markprint BV.
Okay.
So Markprint BV, when they had started out and in the process of their existence from 2015 onwards, they had goodwill in their books of accounts. So as a result of which it has been transmitted into our books of accounts now.
So this will get amortized. What should be the end use of this same? How is this line item going to?
Their accounting policy, they are saying it's going to be amortized over 10 years, and I would imagine it's about 6 more years to go for that amortization to happen.
More 6 years.
6 years more. 6 years more.
Okay. So then this will flow to the P&L part or only the reserve?
No, amortization will go to the P&L part.
Right, sir. So there will be an impact on the P&L on the consolidated numbers going ahead. At the consolidated numbers, sir. So for this year, there is any impact of the same?
For the consolidated numbers?
Yes, sir. On account of goodwill amortization?
Yeah. If you can see, look at the schedule, you can see it, right?
Yeah, it is. The goodwill and amortization expenses is totaling to 15 crore for the year. So it is same as it was last year.
Yeah.
So there is no such impact.
Let me come back to you on this topic.
Okay, sir. And sir, Shiva sir, I think so. It is the increase in the consumable percentage that now we should be looking forward with the installed base crossing the 17,000 number now. So the growth drivers would be the increased consumable only. That should be the key number that we as investors should be looking going ahead. That should grow from here. The percentage in the revenue mix.
Yes, Arpitji, I definitely agree with you. But in the end, we still have to sell the printers to sell the consumers. So, we can't, because see, it's not depending on us, right? I mean, at the end of the day, the customer decides how much he wants to print once we supply him the printer. So, we have no choice in that. No?
Correct. Sir, for the innovative code part, how have the performance of that JV or that subsidiary, how are they performing? I think so. They were to be aligned to our Indian operations. So what's the update and any investment we are going ahead with innovative also?
So innovative closed at about 8 crores of revenue this year, and if you add up depreciation, then in fact it is ending in a cash profit, a minor cash profit though, about 30 odd lakhs. But then that company has got a good potential to grow. So the next year the projected turnover is about 13 crores for them.
Okay. 8 crore is what we got from innovative, and from the Marken, the Netherlands one, what was the?
About 9 crores from there.
And its contribution to the bottom line?
So yeah, so 15.
I think Markprint was only from July, right? If I remember correctly.
5th of July. 5th of July.
Correct, sir. So it was not for the full year. Impact on the bottom line, sir?
The impact on the bottom line, see, innovative ended up in some great revenue losses. And
didn't get you, sir. Didn't get you.
If you can look at it, it is about, let's say, about 2 crores of additional amount.
This is for the Markprint one?
For the Markprint as well. 2 crores of additional amount.
2 crores of additional amount. Correct, sir. And sir, for the depreciation part, I'll get back to you later if you want. I'll get connected. And sir, on the V-shape part of the story, sir, this would be only the equity, the benefits will be percolating to the shareholders only in the form of the profit that will be generated in the JV. So
operationally we won't be consolidating any numbers from them. It will be only the performance, the equity part that will come into play.
Are you talking about the V-Shapes JV?
Yes, the V-Shapes JV part, yes, sir. How will yeah.
V-Shapes JV got incorporated on the 25th of March 2023.
Right, sir.
So in the six days of time, there has been no financial transaction in that particular company.
Correct.
Yeah.
And next year, sir, will it be only a below the line item wherein we will be getting the profit or the loss number as JV contribution, or a top line and all the numbers will flow to the top line?
Shiva, you want to take this question on the V-Shapes thing?
And that's completely so. You're saying that will it contribute to the top line or the bottom line? I mean,
yes, sir. Yes, sir. Will it flow to the top line part, or will it be a single line item in just as has been the case with the contribution from JV, as we have seen it?
Consolidation question. I mean, it would be, up to you and the auditors. I really don't know. I'm assuming that it would be consolidated in our statements because we own 90% of it. 100% of it right now. It will be 90%, then 70%.
Correct.
So I believe the rules are if it's more than 51% or something, then we consolidate it. But I'm not sure.
Correct, sir. So what should be the target? What's the business plan for this year of V-Shapes?
No, Saketji, we've just started this business. We are marketing it. It's looking promising, but it's too early to say. I think there were some questions on the coding and marking business, and I said it's difficult to predict down the line. So, and we've been doing this business for years and years. So, on something new, it's really difficult for me to,
Right. Last very two small points. So firstly, on the royalty, any revision in the royalty rates that we are expecting, and about the Internet of the type printers which we were to launch. Go ahead. Anything on that front? Sir, am I there online? Hello?
I couldn't hear that question clearly. If I don't...
Yes, sir. I'll come again, sir. Firstly, on the royalty part, when is the revision due, sir?
Can you repeat that again? What due?
The royalty revision.
Mr. Kapoor, sorry to interrupt you, but your line is breaking, sir. The audio is breaking from your line.
Hello? Hello?
Yes, Mr. Kapoor, please go ahead.
Sir, I was speaking about the royalty part. When is the royalty percentage revision due? And about the product launch in terms of the IoT printers, what's the update?
Our contract with KBA is till 2026, so the royalty percentages should remain the same, or 2027 or something. But at least for the next few years, it's the same. I don't foresee the percentage of the royalties changing much up or down. And of course, as the percentage of non-CIG business increases, that is substantially royalty-free, if not entirely royalty-free. So, as a percentage of revenue, the royalty should decrease slightly. But as a percentage of CIG business, it remains the same, and at least possibly for the next few years, because our partnership is doing well on both sides, and we're happy with it. The second question again, if you could just repeat it, Saketji.
Yes, sir. On the Internet of Things type printers, the printers of IoT based.
So in all our printers which are new, automatically, the LAN cabling or the wireless or something is enabled. Wireless we tend to use less because it's not totally reliable in continuous communication. So if we need to have a controller separate and, it's an intelligent printhead and we just have to send the message once and the printhead can continue, then it's useful. If we need to continuously send data back and forth, then we tend to use RS485 or LAN. But it's already there in most of our products. As each generation comes out, we keep updating user interfaces, other features, so on and so forth.
Right, sir. And any further update on the Videojet case and the Liberty Chemicals, the land part? Anything you want to share or the status?
Nothing, no movement at all, to be honest. Like, it's really quite stagnant, to be honest.
Thank you. We'll take the next question from the line of Nesar Parekh from Native Capital. Please go ahead.
Yeah, thanks for the follow-up. Just a couple more. One is that, on the pharma and F&B side, when we are trying to obviously grow, how are those verticals doing for us? And, are we seeing any more traction over there?
Yeah, so I think it's been doing fairly good. I think like dairy has become a pretty big for us from a pretty minuscule industry, and of course we put a lot of focus on that. Pharmaceutical, we've not had that much traction. Now, because of the track and trace and the fact that we give an entire solution end to end, we are seeing some more on the track and trace side rather than just selling printer side. We're seeing some more traction there. And, personally, we've always been strong in, for some reason, without being strong in the food, beverage, and pharmaceutical space. So the personal care, we continue to do well, if not do better. And food outside of dairy is still a bit of a, black spot or whatever. But, yeah, when we're working on different things, it's improving but it's like, it's of course, we say things like food and all, but actually it's very, sub-industry or specific application type, thing that's there. So for us, bakery would be very different from dairy, which would be very different from ready to eat. So each thing is there.
Right.
But it's gradually improving, is what I'll say.
Yeah. And building products would be how big for us? Like what percentage would be building products for us today, roughly?
So building products basically, sorry Shiva, you can take it. No worries.
No, it also depends on how you define it. Like what is included? Like is cable and wire part of building products? Is like pipe part of building products? Is like paints? So like what I think is like the thing is that construction materials is such a broad category that it really depends on how you define it. Is cement part of building products? Is something else. So that what I'm just saying is like the thing is that is something that you have to understand. Our definition of what we feel is construction materials, and it could be different from your thing. And Jaideep, now you can answer that question.
Yeah, so basically, for the building materials, probably what I would consider is that, cement, steel, or the plywood, or, the construction material, laminates, even the pipes used. So all these, if you put together, we've made sufficient, inroads into this kind of industry, which is the building segment industry.
And what percentage of revenue that would be?
Well, our revenue is skewed all over the segments. There's no major concentration I can really pinpoint to anything. We do not have a major concentration of this, except for the pipe industry, where it's about 17%. But otherwise, it's more or less everything is sub 10 limits.
Understood. Okay. And, we generally, I think last year we've done around 1.4 lakhs for printer, if we look at consumables, spare services, maybe all put together. So, going forward, how do you see that number shaping up? And, are you looking at any price increases, or are you seeing competition take price increases and on the consumable side? And do you think that, we could see some price pop in FY24, or in general, how will that 1.4 lakh number shape up in your sense?
Yeah, so it's not possible to predict anything, because, like I said, we had undertaken some price increases, and I don't know if the 1.4 lakhs reflects that or not, or to what extent. But the thing is that, we've got a basket of products. That number sort of quite misleading, because if I take all printers don't give us the same amount of business per printer. And, like we said, for proprietary sakes, we don't actually disclose the business or the aftermarket business per type of printer, that we receive. Again, because you're aware that, some of our competitors
Oh, that is fair. That is fair.
So it depends really on the mix or the basket of products that we are selling. And because we are selling a lot more non-CIJ products, especially the thermal inkjet, and a lot of them are used, to print on the cartons. So what happens when you say, if you make a pack of slightly 24 Coke cans, and then the Coke cans are then packed in a carton, and we're printing on the carton. So, so the carton printing is where we sell a large number of thermal inkjets especially. And, that tends to have less business for printer because, you although the print is quite large, you also have less cartons as compared to the primary product. So the secondary printing, so, that can change the mix a little bit slightly downward, but the price increases or the other things have shifted slightly. So, it's a bit in balance, but it's very difficult for us to predict. And there's no, we can't target it because the target is to increase the overall volume of installed base business rather than look at the specific averages, which means we sell what we can sell as easily as we can sell it rather than get obsessed with maximizing the averages.
Thank you. The next question is from the line of Karan Bhatia from Asian Market Securities. Please go ahead. Mr. Bhatia, your line is in talk mode. Please go ahead with your question.
Am I audible now?
Yes, now you're audible.
I'm saying, JD, other manufacturing expenses are 16 crores in this quarter, significantly higher compared to last year and previous years. So which of the cost element has gone up? Hello.
Yeah, Jaideep, you want to get back to that question?
So we can't hear the audio.
Jaideep?
So we can't hear the audio from the line. I'll disconnect and rejoin the line, sir.
Yes, please.
Ladies and gentlemen, request you all to please stay connected while we reconnect the line for the management. Thank you. Ladies and gentlemen, thank you for patiently waiting. The line from Mr. Jaideep Barve has reconnected.
Yeah.
Over to you, sir.
I'll repeat my question.
Yeah, please.
Jaideep, other manufacturing overheads in this quarter is 16 crores, which is slightly higher compared to any other quarter or any other year. So what explains this? Which expense has gone up significantly?
So you're talking about not the manufacturing overheads, you're talking about other expenses, right?
Which is 16 crores for this quarter.
Yeah, this is other expenses, right?
Yes.
So other expenses, basically, their reason is, if you look at the expenses as compared to sales, the ratio is much the same.
I don't see that because the ratio is somewhere at 19%.
No, from 13% has gone to 14% if you take it on sales basis.
how is it possible? Other expenses is 19% of sales. So, if I take 16 crores on 84 crores, it is somewhere at 19% compared to much lower numbers for any other quarter historically. So just wanted to understand which cost element under this basket has gone up significantly.
So it's about the same. I mean, as compared to sales, it's more on the same things. I mean, we are looking at better economy, better rationalization of the costs, which will definitely go down in the next year. But I'm not. Right. I'm seriously concerned that if you're counting at 16%, I mean, how did you arrive at 16%? I
am arriving at 19%.
Oh, 19%. Okay, so basically you've added. I think there's some grouping of expenses what you might have done.
Yes.
The answer is, it's pretty much in the line of sales, but there exists sufficient, opportunity for us to optimize it much better way so as to improve our margins in the next year also.
Yeah, that is correct. That is going ahead, right?
Yeah, going ahead. No, but if you look at percentage of sales, there's not much of difference. I mean,
Okay. And on the mass business, I believe for FY23, the total yearly sales is not more than 5-6 crores.
Yes, it is.
So how do we take this business going ahead? Any outlook on that?
See, we can't plan, right? Everything depends upon the COVID situation and the government's, initiatives in propagating the distribution of masks. So this is, quite a thing which is depending on the health awareness and the conditions prevailing. So at the moment, we do not have much visibility on that. But at the end of the day, just from a pure hygiene factor, the use of masks is, it started there in India. So wherever possible, we've got, 6 customers like Amazon or like some of the supermarkets. They keep on ordering us. So unless there's a major pandemic coming in, we can't have any visibility of the masks now.
And we've capitalized the entire investment we made historically?
So it's done. I mean, we had capitalized it and then we've depreciated accordingly also.
Okay. Thanks for the detailed answer. Any closing remarks you want to make, Jaideep, Shiva, anyone?
Well, we would just like to thank all of you, for supporting our company and encouraging us.
There are more than 20 parties in the conference.
And we hope to see you in the next quarter, which is the first quarter for 2023-24. Thanks a lot.
And yeah, from my side also, thanks to everyone. I think, a lot of kind words and, great questions coming up. It's good for us to, get a lot of points of view. Like I said, there are some things it's difficult for us to project or predict. We avoid doing that. I know that frustrates some people, and some things we can't share very detailed information because our competitors are not obliged to do so, and we don't want to be in a back foot to them for certain reasons. And as far as some things, of course, go. Like I said, we've got a longer term viewpoint, when it comes to a lot of strategic initiatives, like whether it's the V-shapes or the digital printing or the track and trace. We're looking at when we're looking at these types of investments, we're really looking at, whether this would benefit us in 2030 or something like that. So I understand there's, a lot of questions, and of course, we're also looking at whether we are going in the right direction. But, in general, we've got a slightly longer view on things because, what we want to do is we want to make sure that we are able to execute in the longer term and, it's not short-term driven. So just an idea, because I know that there's not been as much movement on some of these things as what everyone would want, but, we just, we have a different sort of timeline in some of these cases mentally. So, obviously, and a limited amount of bandwidth. So maybe that's why it's something that we need to improve upon. Thank you.
Thank you. Ladies and gentlemen, on behalf of Asian Market Securities Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.